Hello everyone, welcome to another live stream. So hello to the live viewers, but also hello to the ones that are watching the recording because I notice actually most people watch this as a recording after the live, which is totally fine. So yeah, today is Thursday and let's get started into the markets. Just a brief overview of what has been happening. So the gold trade is still running in some profit. I think running around maybe 3R, and at one point it was even at around 4R. I do have profit locked in, so I'm using a trailing stop loss. Currently, I'm trailed at around the 3,200 level. Okay, so around this level is where my stop loss is trailed at. And again, this is more of a long-term play, more of a fundamental play. So let me also recap why I got into this trade. I think that will be interesting to some people. So the reason was, first, fundamental analysis. So the numbers were bullish for gold at this point, meaning the numbers were weak for the US dollar. Okay, which numbers? Well, the numbers like inflation, jobs, interest rates, PPI, CPI, NFP, all of those news events are taken into this analysis. Okay, so fundamental analysis was bullish for gold. The second thing was the macroeconomic environment. And at this point, this was the 9th of April, so like 2 weeks ago. And at this point, the macro environment was actually bullish for gold. The reason was Trump tariffs, risk off, everyone is scared, stocks selling off heavily. You can go to the daily chart, go to the S&P, and you will see stocks selling off heavily. Everyone is scared, everyone is panicking. That is a great time to buy gold. So that is a great time for risk of assets. So yeah, great time for risk of assets. Third thing, how were we looking on the daily chart? I was looking on the daily chart and we weren't really overextended. One of the issues that I found when I want to go long or go short on a pair, and if you have a trend like this, okay, well, basically, you don't really want to be buying straight at the top. Not the smartest of things, because your risk to reward is going to be pretty bad, and there is a high chance that you'll get taken out before the markets will actually move in your direction. Okay. So what I like to do, or what I found is better, is to wait for a bit of a pullback on the daily chart and then try to get in at this area. And that's exactly what we saw here on gold. We saw price first pull back a bit. Okay. So you could slap on a moving average on there. Moving average. Hear me? Moving average. Simple. Okay, moving average simple. You can slap a moving average on there. You can put, let's say, on the daily chart, let's try 50. Yeah, the 50 is okay. See, the 50 is okay because it tells you that basically when the price is very far away from the 50 MA, it's kind of overextended. So here on the top, the chance of this continuing is lower than the chance of it continuing when we touched this 50 MA. Okay, so that is why you could use moving averages to see when the price is just a bit too overextended. I'll remove this because I don't really use it. I just kind of do it by eye, to be honest. So at this point, the daily chart was looking okay. We had that pullback, we had a bit of a correction, and then we were possibly ready to continue to the upside with more momentum. Okay, so the next thing was jumping on the 1 hour chart. Okay, jumping on the 1 hour and looking for an entry. And we did get an entry. We got a nice break and retest here. We got some bullish momentum right there. Then we broke out. Nice candle, clean close. retesting this level. So yeah, this was pretty good. Got taken in. And after that, I placed my stop loss below these lows. So the stop loss placement is kind of done for me personally on the 4-hour or the daily chart. So I want to give the trade a bit more room to breathe. Okay, a bit more room for the trade to breathe. That is why I tend to keep the stop loss or do the stop loss placement, let's say, on these larger time frames for this fundamental strategy. Just a quick recap. I do have two strategies. So I have the one purely based on technical analysis, purely on the 1-hour chart, and this new one, fundamental, and on multiple time frames. So yeah, current recap of this trade is, as I mentioned, it's running around 3R, and I do have locked in around 2R at this point. That is where my stop loss is located, around 3.2 or 3,200. I'm just continuing to trail it. Fundamentals still bullish, so the economic numbers are still looking bullish for gold. Macroeconomic environment, which is very important at this time. Okay, very, very important. The macro environment is bullish as well because you still have risk off. Still, everyone is afraid of tariffs. A lot of uncertainty in the markets. No one really knows what is going to happen, right? You do have the 90-day pause that Trump did. So he paused with the tariffs for 90 days. But now everyone is wondering, well, what will happen after those 90 days? Okay, what will happen after basically the pause? Okay, if the tariffs go into place, those extremely high tariffs, if no deal is struck between the United States and other countries, well, then there will be an issue. There will definitely be more selling on the S&P, and possibly gold could continue going up. So that's the macroeconomic picture for our gold. For gold. Am I looking for any scale-ins? That may be a question. Am I looking to scale in a bit more with our buy setup, let's say at this level? Possibly. Possibly if we get a nice bullish reading from the software that I use, which is the Edge Finder. Yeah, if we can bounce off, so pull back a bit, bounce off, get a nice buy setup, I'll consider possibly scaling into my position. That could be a nice trade. But that's about it. I can't do much right now because I'm already in a quite big buy position. Just trailing that for now. The next one I want to comment on is the Euro US dollar. Okay. Now, I love trading the Euro dollar. I have had many trades on this pair. It's one of my top pairs in terms of like trading volume. But currently it's flat. I do rely mostly on the 1-hour chart for both strategies, and currently this is looking pretty flat. It's kind of stuck between the low and the high. Okay, so stuck between the low and the high. I would expect a bit more a range-bound price action, okay, to happen. We did have some very significant news today. You can look at the latest updates, but I just look at these bubbles. So basically, you had the ECB press conference. Okay, the ECB press conference is a pretty important, I would say the most important news event when it comes to a particular currency. And with the ECB, the actual number came in the same as the forecast and came in lower than the previous number. Okay, that means the European Central Bank, the ECB, is lowering interest rates, right? What does lowering interest rates do usually? Usually it stimulates economic growth, okay? So it boosts the European economy, which we can take a look at the DAX. Let's take a look at the DAX. Well, there wasn't really a big reaction on the DAX. If you're wondering what is the DAX is the German stock market, and the ECB lowering interest rates should be bullish for the German stock market. Not that big of a reaction, I have to say. Literally no reaction. So I think tariffs are currently the most important part. Okay. Mubarak says, hello, hey, how are you doing? If you guys have any questions, of course, you can put them in the chat. I go through every single one. Or if you guys that are watching the recording have any questions, definitely put them in the comment section after the live stream ends. So yeah, I'll respond to every single comment as usual. Euro dollar flat for now. I can't do much right here. Okay, I can't do much. I'm just waiting. We didn't have sort of no reaction with the ECB interest rate decision, right? Very little reaction. So the tariffs are still the most important part, the most powerful part that is impacting the markets right now. That is why knowing the macroeconomic picture, it is the most important part. It's even more important in some cases than the actual numbers, because 2008, 2020, Russia-Ukraine war, those kind of events take precedence, or they are much more important for the markets. Markets react much more to those than they do to economic data. So what is the game plan? You may be asking, I'm just blabbering on about this being range bound. What's my game plan? Well, I'm going to flip to the daily chart, and I'm going to say, we can even slap on the EMA. So moving average. Let's put a star here, favorite. Let's do this. Yep. So if we slap on the EMA, what does the 20 EMA say? Yeah, the 20 EMA is even better. The 51 is a bit too big. I think 20 may actually be the sweet spot. So the EMA is a bit far away from the current price, right? How much? Around 291 pips on the daily chart. That's a lot, I would say. So a correction would not be surprising, okay? A correction would not surprise me right now. As you can see here, if you were buying at this point, eventually we corrected, we touched the EMA. See how good it follows the price? I think 20 it's a good EMA. Very nicely with the downtrend, with the sell-off that we had in 2024, like the latter part of 2024. My game plan is possibly to see price retest this level. So to pull back a bit, to correct a little bit, to stop with the selling for a period and then go up, right? I think I can paint a better picture. Let's hide this for now. If we go back to the 1 hour chart, okay. So you can see the level. The drawings just get copied over from the daily chart to the 1 hour. The game plan is to see this possibly correct a little bit first. Pull back a little bit and then go up. Show me a buy setup. That would be a play. I would like to take that trade, especially with the current fundamental numbers or economic data, which I'm going to show you for the euro dollar, which is very bullish, and the macroeconomic picture. The current macroeconomic picture is bullish for gold, bullish for the Japanese yen, since they are safe haven assets, bearish for the dollar because people are fleeing from the United States. The trust in the US dollar has been lost for now, okay? Bearish for stocks. So bearish for the DXY, bearish for stocks, bearish for cryptocurrencies as well, right? Crypto acts like a technology stock. It's not a safe haven asset. Crypto is a risk on asset. Risk off assets are safe haven assets. US oil actually gaining some value, which is okay. That's interesting to see, but usually in a risk off, I do believe oil prices do go down because they have gone down drastically. I'm not an expert in oil. I don't know much about it. Something for me to learn. Still learning about it. So yeah, I'm focusing on the things that I have thoroughly researched and that I know the macro picture on. So another thing that could happen is, and also let me just show you that we're kind of on the monthly chart, we're kind of testing these highs, right? Trying to break out of the highs, this high and this high. So we could very easily retrace right here. Okay, we could retrace right there. I would like to see some bullish pressure. So another scenario to take a trade on the euro dollar would be to look if we can break out with momentum. Okay, break out with some force, break out with some momentum. Not a bad idea to go long, not a bad idea to buy. So yeah, actually, I do like both scenarios. The only scenario that I don't like is if we're flat. If we are flat and range bound, I cannot do nothing, or I can't do anything. I need movement up or down. It's going to help me either way. It's going to probably produce an entry setup, but being flat is not good. Pound dollar, I have some old drawings. Pound dollar is also on the radar. Okay, so the main three instruments on my radar are gold, euro dollar, pound dollar. Pound dollar, the reason is fundamental story, economic data is bullish. The pound is doing good, the dollar is doing bad. Something that I often talk about is if you're trading Forex, you don't want both currencies to be strong and you don't want both currencies to be weak. Example, EJ right now. Both currencies right now are kind of strong. Okay, so kind of strong, both currencies right now. And as you can see, yeah, just being flat and corrective right there. So what you need to create a trend, to see a trend in the markets, you need one of the currencies to be strong and you need the other one to be weak. That's what creates trends. We actually had a very nice uptrend on the pound. We just did not pull back. We did not get an opportunity that I was personally looking for. So for the pound, here is my game plan for the pound. Jumping on the daily, let's see the 20 EMA. And you can see we are a bit extended. So from that EMA, 228 pips. I would say that is quite a lot. That is quite a distance. I would not really be a buyer at this level. I would rather see the price pull back a little bit, correct a little bit, and then I would possibly look for some buy setups. Any levels? Well, maybe this level or the one that is a bit lower right there. Okay. So these are the levels that I'm paying attention to. If we go back to our 1 hour chart, see, these are some of the levels where I would like to see the price pull back to. Let's hide this. And if it does, I'll look for a buy setup. Okay, maybe we do something like this. Of course, my game plan is to get in on a flag or a break and retest at this point, possibly even a reversal setup. A reversal setup is just a descending structure and then an impulse to the upside and then a retest. So this is a reversal. See? Or if we can go down lower to that second level, get a similar thing, I would be happy to get in on buy setups. That is the game plan for the euro dollar and the pound dollar. Those are some of the levels I'm looking at. I'm definitely actively looking for a trade. I would like to get in on a trade. If it does go up a bit, I'm not sure. If we do go up a bit like this and get an entry, I think it would be still a bit overextended. Yeah, then we have this massive level of what is it? Resistance. Yeah, here it's resistance, here it's support. So massive level of resistance on the daily chart, this really important high level, and you could see some sell-off happening there. So do you want to be buying? Do you want to be a buyer exactly at this level? No, not really, because there is a high chance the price will, once it hits the level, that it will retrace. Okay. That's why I would like to see the price first pull back a bit and then give me an entry, and then I have a lot of room from my entry level to this major resistance level. You're getting a better, I think you're stacking the probabilities in your favor, and you're getting even a better risk to reward opportunity. Okay, so that's about it for the pound and the US dollar. I showed you the game plan, and those are my top 3 things I'm looking at this week. Top 3 things. In terms of news, big news this week was the ECB. Okay, Europe cutting interest rates, bearish for the euro, so it's good for the European economy, meaning that the economy will expand, but it's bearish for the currency. Okay, so you could expect the euro to lose, possibly lose a little bit of value, okay, against some other stronger currencies, but not much, not much. Then when it comes to, okay, I have some more drawings here. When it comes to the pairs that I'm looking at for this 1 hour chart strategy, the OG strategy, the one I have been trading for years now, the new one is kind of, it's this strategy but evolved. I added fundamental analysis and I added multiple time frames. Okay, so yeah, Aussie dollar is a currency pair that I also love to trade. Very, very good currency pair. So we have been going up, but now we have slowed down here. I do classify this price action as being range bound. So I cannot do much. I cannot do much right now for the Aussie dollar. I would need to see a large push up or a large push down. I would need to see some strong momentum to the upside or some strong momentum to the downside. Okay, that is what I would personally need to see on the Aussie and the US dollar. And yeah, right now I cannot do much right here. It just looks flat and corrective in this area. Switching to the JPY pairs. JPY pairs are something that I have traded also for years now. I do like them, but a lot of the time the JPY pairs are choppy. Okay, choppy. Bad price action, kind of huge wicks all over the place, huge wicks up, huge wicks down, pretty corrective, pretty flat. Okay, pretty corrective, pretty flat. Just not doing much, not moving up, not moving down. I also mentioned both the euro currency and the JPY currency are strong. That means flat price action. That's bad if you're if you're trading the trend. Okay, if you're a trend trader, this is bad. You need one of the currencies to be very strong and the other preferably to be weak. AJ is a bit of a better story. You know, we had some trends, we had some movements on AJ, but the most recent price action just flat and corrective, and NJ would be the same, unfortunately. Not really moving anywhere, trickling to the upside, kind of struggling to go to the upside, correctively ascending, what you can see here. Possibly forming a bit of momentum, but if I zoom out and if I make a conclusion from this price action, I would say that this is pretty corrective stuff. Okay, I would say that this is pretty corrective price action, unfortunately. So yeah, pretty corrective price action right here. Also, NJ moves pretty similarly to the Aussie JPY. Okay, these two pairs move kind of in tandem. And that's about it. I'm not gonna waste too much time on the JPY pairs. So we're gonna go back to the things that that are actually moving, that are doing something. So right now, for this next segment, let's jump onto the Edge Finder software. Let's take a look at some fundamental data. And just give me a second for me to open it, because I need to open a new window. So it takes some time. But yeah, let's do this. Stop sharing. And we can share the Edge Finder. Okay. So we're live. This is it. This is the Edge Finder software right here. And these are the readings I'm looking at. So I'm going to take out the neutral reading. NZD CAD, Aussie CAD, Bitcoin, NASDAQ is bullish, UK 100 is bullish. We're going to take a look at stocks. Aussie dollar is bullish, Euro dollar is bullish, see Euro dollar, pound dollar bullish, looks good. Bearish, we have USD yen. There are some interesting pairs that we can take a look at here. So USD Swiss. No, I think the interesting ones are gonna be the NASDAQ. Okay, NASDAQ, and it's gonna be USD yen. Okay, because gold we have done, pound we have done, euro dollar we have done as well. Bitcoin, I mean, we can do Bitcoin, but it, as far as I remember, looks pretty crappy. So yeah, that's good. What I also wanted to take a look at, this is the analysis. This is the analysis according to the, let me just see, just the economic data. Okay, this is just the economic data, as we can see right here. And okay, S&P 500, good economic data. That is interesting. Yeah, okay, we have some interesting stuff on here, but I'm not really gonna go too deep into this. What we can also take a look at is the economic heat maps. Okay, so for the economic heat maps, if we go to the European one, you'll see today is, why are there no interest rates here? Okay, so the latest news is missing because the interest rate decision was made a couple of hours ago. I don't see it on here. The last news update was the CPI, which happened on the 16th of April. That was yesterday. But for the US, you can see that they do have. Do they have interest rates though? Okay, looks like I cannot really find the interest rates. We're gonna do it a bit differently. But anyways, this is the data for the US, which is pretty important to keep your eye on. And why I love this software is you get all of basically numbers, all of the numbers, and then you get the impact on the dollar and the impact on US stocks. See, the current impact for the US dollar is pretty bearish, I would say. For stocks, kind of mixed. Okay, it's both a bit mixed. But this is good to see when the last data has come out and what will be the impact on the dollar or for stocks. The thing that we can do is we can go to top setups and we can click euro dollar. Yeah, this is how we can find the interest rate. Yeah, okay, this is it. And then if you go right here to currency and you go to the interest rate, you can see that the score is -1, which means it's bearish for the euro, and it's +1 for the dollar. So yeah, so it kind of cancels out, okay, because this calculation has determined that there is no clear edge between the interest rate difference between the euro and the dollar. So it gave a neutral reading for the interest rate, which you can then see here. For euro dollar, let's filter it, asset euro USD. Yeah, see, it's 0. Okay, so the example would be that for the euro dollar, the current edge for just trading interest rates between the euro and the dollar, or making a trading decision based on that, it's not really doable. The reading is kind of neutral, but the unemployment rate is better for the euro, the inflation is better for the euro, the retail sales are better for the dollar, the PMIs are better for the euro. The trend reading I don't really pay attention to. Seasonality is better for the euro, so the euro usually appreciates in April. Retail positioning is bearish on the euro dollar, which is a contrarian signal. So if the retail is bearish, you should be bullish. Okay, that is the best way to look at it. You should do the exact opposite than what the retail is doing. And the commitment of traders, big players, institutional money, the money that really knows what's going on and that are mostly profitable in the markets, that make money because they have so much money that they actually can move the markets, they are very bullish on the euro dollar. So that's good. You should follow them. We can also quickly check out the seasonality. If we go to the monthly seasonality, euro dollar, let's see how the euro dollar usually does in April. And yeah, you can see usually in April it's a positive month. So usually the euro appreciates against the dollar in April, but in October it usually depreciates. See, this is the 10-year average. So this is pretty cool as well. The three main things I look at from the Edge Finder software, okay, by the way, if you want to check out this software, currently there's a 45% discount if you use my code. And my code, I'm going to put it in the chat. My code is MARKO. Okay, so the code is my name, basically. And yeah, that's going to give you a 45% discount on this software. This software is Edge Finder. I think I forgot to put it in the description. I'll put it after I finish the stream. Alireza says, hello, Marco. Do you do live trading? Yeah, I do live trading, but I'm a swing trader. Okay, we're gonna stop sharing this. We're gonna start sharing trading view. Okay. I'm a swing trader, so I don't really enter positions live on the stream because I don't take a lot of positions, but I'm currently in a buy setup on gold. Okay. I'm currently in a buy setup on gold and currently running around 3.2 hours. And my stop loss is at around the 3,200 level. That's the only trade I currently have. Okay, the only one I currently have, because I'm waiting for some setups. The setups that I'm waiting for are on the euro dollar and the pound dollar. I'm waiting for these currency pairs to do something. Okay, move up, move down, just move somewhere. But my bias is bullish. I want to be a buyer here. I want to be a buyer right here as well. Unfortunately, currently they are flat and range bound. So that's not the sort of price action that I want to see. Anyway, yeah, thank you for joining the stream. What I want to do next. So we have done the fundamental strategy. We have done the OG strategy. We have done the Edge Finder, so the fundamental analysis. Let's do some more instruments. The most popular ones, right? Or the ones that we saw. Yeah, no worries, Alireza. The ones that we saw on the Edge Finder. The first one, we can do the S&P and the NASDAQ. The NASDAQ was very, very bullish. There's not much I can do here, okay? I am buying the S&P 500 for a long-term investment. I think this is a good discount right now, around 13.6% discount. I would say that is pretty good to take advantage of. But on the 1 hour, I mean, there's not a lot of activity. We had the tweet from Trump. It was this candle right there. The tweet was about a 90-day pause, right? 90-day pause on tariffs. Markets exploded. The stock market exploded up. After that, it was just no man's land, right? Just a lot of quiet, flat price action. Nothing much is happening. We need another catalyst. Okay, we need another catalyst in these markets. The current catalysts, the most powerful ones, are anything that concerns tariffs. Okay, any bullish, any bearish news. So if Trump puts more tariffs, this thing is gonna continue melting down. If Trump keeps removing tariffs or keeps doing more deals with other countries that results in the, let's say, that results in removing tariffs, that means we will go up. I think a lot of people, a lot of investors are waiting for what will happen after the 90-day pause. Okay, that's going to be the due date. That is going to be a very important date. That is when we will see, will the huge tariffs actually go in play? Will they be implemented, or will Trump remove them or make them smaller? So if there's no crazy tweet from Trump in the next 80 days, I do believe we're going to be pretty flat, unfortunately. I don't think there's going to be any major catalysts until we get the 90-day pause due date, right? And yeah, with the new strategy, I'm also looking to actively trade stocks or the S&P, the NASDAQ. I have taken a live trade on NASDAQ a couple of weeks back. We had a good fundamental picture, good economic numbers, but just it was a loss. Okay, it lost. So as we saw on the Edge Finder, the NASDAQ was getting a very bullish reading. Unfortunately, the story is the same as the S&P. Let me just see the monthly chart. Interesting. So yeah, unfortunately, the NASDAQ looks the same as the S&P. The last price action, the last couple of candles that you can see on the screen have just been Trump tweet, explosion, flat. Okay, flat, range bound price action, doing nothing, and unfortunately, we cannot do much as traders. What I would like to see on the NASDAQ, because I am actively looking for positions, I would be interested to look for some buy setups. I want to see a breakout, right? I want to see a breakout, and it'll be pretty important that I actually put it here. Okay, I'm going to put it on this new watch list that I have. So what you will also notice is sometimes I'll give a color to a specific currency or a specific asset. That is if I'm looking for an entry right now. Okay, but I'm not looking for an entry right now on any of these instruments. I'm waiting for a breakout because they are mostly range bound. What do you think about the gold chart? It sees 3.5K. Let's see. 3.5. I don't know. 3.5 is pretty high up there. 3.5. That's the level. I think we're going to have to see a correction before we see 3.5. Okay, it is likely that we will see 3.5 maybe this year or maybe the next year, but I do think we first must have a correction. I just don't see the price exploding up, being so far away from the EMA, being so far away from the mean of the move without first retracing. So I would actually expect for the price to retrace a bit, and then possibly we can grind higher to 3.5. And it could be done this year. So conclusion, I do think we're going to hit 3.5, but I do think it's going to take more time than most people expect. And I do think we will get a pretty big correction before we see 3.5. The correction meaning right here. So maybe like from the peak 5-6% correction, maybe 7% correction, just for things to balance out a bit. Okay. Because we have to move in let's say a more regular manner. This is now very impulsive. I'm not saying it cannot happen. I'm not saying we cannot just explode to the upside. We can do that. I've seen it happen. But the probabilities would tell you that this first needs to pull back a bit, that this price is overextended, that there is too much steam, and that we just need to see a bit of a correction. So hope that helps. Do you have any trades on gold? Are you looking for any setups? You can put it in the chat. So the NASDAQ. Yeah, the NASDAQ, let me tell you my game plan for the NASDAQ. My game plan for the NASDAQ is to see more bullish price action. We're going to remove this EMA. Not really on the 1 hour. I would like to see a bit more convincing price action on the daily chart. Okay, I think Trader Nick is talking basically about the same thing as I'm going to mention right now. He wants to see an impulse to the upside because we just had this one massive impulse, and it was all because of the Trump tweet, right? But the Trump tweet did not solve anything. The Trump tweet just postponed the tariffs for 90 days. So if after those 90 days no deals are struck, we're going to see further sell-off. So the risk-off environment is not finished. The risk-off environment can easily continue. And for me to be convinced for a bullish case, okay, for a bullish case on the NASDAQ, I need another leg up, okay, continuation of this leg. So maybe something will happen, maybe in the next few weeks, Trump will say, we've talked to 50 countries and we've struck a lot of good deals. And because of that, I'm going to lift a lot of the tariffs. The tariffs will be a lot smaller than expected. The stock market will love it and it'll go up. Maybe that can happen, but you need a catalyst. You need a catalyst. You need a fundamental catalyst. You need a macroeconomic catalyst. Until that happens, people will still be scared, uncertain, risk off, sell stocks, sell first, ask questions later. Okay. So no one really knows what's going to happen. The uncertainty and fear is still very high. But again, if we can go up a bit, I will look on my little 1 hour chart. I will look for something like this. A nice flag, a nice break and retest, get in on some nice buy setups, like this. Big stop loss, give the trade some room to breathe. If you're doing fundamental analysis, if you're doing macroeconomic picture, you can get a lot of noise. It takes some time for the fundamentals to get priced in, and you want to give the trade breathing room so that it can pull back, it can go into a bit of a drawdown, and then go into the desired or predicted direction. Okay, so that's the game plan for the NASDAQ. I do like it, but I need to see an impulse up. So, the team today, the team for the live stream is pretty much that everything is flat. The risk-off environment is continuing. Gold is the only one that is kind of moving. All of the other ones are pretty flat, pretty corrective. Okay, the pound. You could say the pound has been moving up. Okay. So yeah, that is it. Another pair I wanted to touch on is the dollar yen. USD JPY. What is this? CMC markets? That's something new. I don't want CMC markets. I want WANDA. Okay, this chart. This is the dollar yen. I'm bearish on this chart. The edge finder is bearish. It's giving you a bearish reading because the dollar is currently a very weak currency and the yen is currently a very strong currency. That means this chart should go down. Let's start with the daily. Let's see what the daily chart has been doing. There's a definite trend line we can draw right there. We are moving in this sort of Shreya says, is the market open tomorrow? Because of holidays, you ask? Yeah, it's open. The market should be open tomorrow. I'm not sure, maybe the stock market could be closed or have reduced trading hours. So, but I do believe the Forex market is open tomorrow. Okay, something for me to check. But yeah, should be open. Okay. On the dollar yen, we're getting this channel. We're getting this channel formation. The price is moving from the top of the channel to the low and then slowly trickling down. I would like to see some sell setups here. I'm not gonna lie. I'm getting a good confluence from the edge finder. So the economic numbers I just talked about are bearish, but I also like the macro picture. The macro picture is everyone is fleeing from the dollar into the yen, right? Everyone is feeling fear, uncertainty, doubt. That means they're gonna buy a lot of yen. And you can see it being reflected in the price. The problem is, I would go short. I would be actively looking for short setups, but it's very expensive. Okay, shorting the dollar yen is very expensive because of swaps. Okay, swaps. You pay swaps when you hold a forex trade overnight. You pay commission. Don't get me wrong, but on top of commission, you pay swaps. And Wednesday is triple swaps to account for holding the trade over the weekend, I believe. So you're getting swaps every single day, but Wednesday is triple swaps. And the swaps all depend on market interest rates, on the interest rate difference between two currencies. If you have the dollar, which has a high interest rate currently, and you have the yen, which has a low interest rate, I can show you the numbers. So USD interest rate. I use the Trading Economics website. It's pretty good. Current rate is 4.5. And for the yen is 0.5. Okay. And I can actually show you this. Let me show you. So let's actually stop sharing this. Let's go back to the Edge Finder because it's built in. It's built into the software. Okay. Edge Finder, it is right there, carry trade scanner. Here you can see the interest rate divergence. You can find the dollar yen, and you'll see it is the shittiest offer that you can get for shorting. USD JPY, base currency rate 4.5. The current interest rate for the dollar is 4.5. It's pretty high. For the yen, quote currency rate 0.5. The difference 4%, right? If you want to get swaps, if you want to get paid swaps, you need to be a buyer in this market. And with such a huge divergence, it's going to be very expensive to be a seller. If you have some long plays, if you have a good edge to go long on the dollar yen, you could make a bunch of money in swaps, right? But if you're selling, which I would like to sell. I would like to sell the dollar yen. And also, if you're looking at US dollar, I think this is the Turkish lira, US dollar ZAR. I think this is the South African rand. Maybe these are all small currencies, okay, which I do not really pay a lot of attention to. You can see the interest rate divergence here is massive, but there's not a lot of money to be made in swaps here. Okay, so ignore this. This is important. The big currencies, okay, the big ones such as dollar yen, euro JPY, euro GBP, euro dollar. Those are all majors. You have majors and minors. Majors, minors. I'm looking at the majors mostly. So yeah, getting back to it. See, Edge Finder, great stuff. Great stuff. Let me expand this a bit. We are going to stop sharing. We're going to go back to trading view. Share. My conclusion is that I would like to short the dollar yen, but it's too expensive. And also you could say it's a bit overextended, but this time it's overextended to the downside. Check out the gap. Check out the gap from the current price to the 20 MA. Okay, 20 MA is a good one. I like it. I'm probably gonna continue using it, especially for the live streams. Paints a good picture. See here how it gets respected. Price eventually pulls back to it and does respect it pretty fairly. See, also here, touch, go. See here, kind of touch, go, touch, go, touch, go. Here, went a bit deeper. You get the picture. It's not going to be perfect. I do think we could pull back here a bit. So if you were really smart, if you were a really great trader, you could short-term be a buyer here and get paid swaps, because this should correct at some point. This is not my style. Because why is it not my style? I don't want to go against the fundamental numbers, which are very bearish for the dollar yen. I don't want to go against the fundamental or the macroeconomic picture, which is super risk off. So not for me. But if you were a expert trader, you could find an edge here, go long, collect some swaps, maybe even make a profit on the underlying position as well. Okay, I wanted to check out the dollar yen. VIX. VIX is something that is pretty important as well. It measures the volatility of the S&P 500 index. Okay, measures the volatility of the S&P 500 index. And you know something that is interesting? I was watching a video from SMB Capital, which is one of the best prop firms in the world, not like FTMO. FTMO is a casino. But Positive or SMB Capital actually trades their own capital. Okay, only in-house capital is being traded. And they released a video about a trading edge where you can sell the VIX each time it hits the 40 mark, and you could make a nice trade out of that, because once it hits the 40 or maybe even 50 mark, usually it retraces quite heavily. Okay, usually it doesn't go much above the 40 or 50 mark. Just a couple of examples that happened in the last couple of years. It happened in April 25, happened in August 24, happened during COVID. This was 2018, okay, February. And August 2015. So it happens every few years, but it's an awesome trade, okay? How to execute this trade? Stuff. You need to know a lot about options. You need to know options trading, and you need to have at least $20,000 in your account to be able to afford trading the VIX in this way. But the win rate is extremely high, okay? I think S&B Capital had 5 trades in the last 10 years. All 5 were winners. Okay, all 5 were winners. So the win rate is extremely high, because VIX hits 40, doesn't go much above it. Okay, doesn't go much above it. So, and usually when it retraces quite quickly, and then the stock market goes up. So how it goes, it is all connected with each other. If the stock market is going down, the VIX goes up, okay? Because sell-offs are so freaking violent. The sell-offs are extremely fast, extremely violent. So the volatility goes up. If the VIX is going down, okay, that means the S&P is going up, okay? If the VIX is super flat like this, then the S&P is trickling to the upside. So if we are being flat like this, just kind of neutral in this range, that means the S&P is slowly grinding to the upside. That is this. See, slowly moving up, slowly grinding to the upside. Wanted to comment on that. The VIX currently going down. That is good for the stock market. Okay, that is a bullish sign. If the VIX is going down, that means the stock market should be going up, or yeah, basically, as I just explained. Silver going up, but much worse than gold. Okay. Yeah, if we look at the daily chart, just silver looks problematic, you know. Silver, to me personally, looks a bit problematic. I'm focusing on gold. We had a massive sell-off in silver, just massively selling off. Now retracing, now reversing. But I wanna trade the chart that looks the best. Okay, I wanna trade the chart that looks the best. That's gold. Just compare this to silver. See, massive difference. Silver not that enticing, although fundamentally silver is producing some good economic numbers, some good economic data. But I'm leaving it alone. That is why it's in this section. Okay. The things I have on my watch list are in this section and in this one. But the things that are not that interesting, I have here for the live stream. Crypto, doing nothing, being pretty corrective, pretty flat. Okay, unfortunately, crypto is not doing much. Bitcoin, Ethereum is probably selling off. Oh my God. Yeah, Ethereum, every single week when I open this chart, we're lower. Every single week it's just lower. And very bad price action. Very bearish price action. So crypto is currently in the dumps. And I'm pausing every activity. I'm not buying for like a long-term hold at these levels. I would like to see lower levels. I would like to see Bitcoin. So let me tell you, currently I'm trying to get my money into the S&P 500 at a good discount. But for crypto, I already have some crypto. I would like to get some more, possibly when we hit this. Maybe if we hit the lower level like this, that would be a great discount, like 50k. I would definitely be looking to buy some Bitcoin at 50k. Ethereum I wouldn't touch. Okay, Ethereum I just don't like this at all. I could buy a lot, get a really cheap price. I do think in the next 10 years Ethereum should recover and make some nice gains, but Bitcoin is a bit of a safer bet. Bitcoin is a bit of a cleaner chart. Okay, bit of a better chart. The DXY is continuing to melt down on this daily chart, so just continuing to be very bearish, continuing with the sell-off. I would expect more, to be honest. I would expect more sell-off. I just saw a tweet from Trump recently. He started to shit on Powell because Powell had a speech and he said that they're not really looking to cut interest rates yet. They're looking at economic data. They're probably expecting possibly some inflation to rise in the near a few months. But Trump really wants low interest rates. Low interest rates, they are great for economic growth. They are great to get cheap loans. So for businessmen, for investors, for people in real estate, cheap, low interest rates are great. And as I said, economic expansion is great. Companies usually grow when the interest rates are low. So Trump wants to stimulate the economy. He wants companies to grow. He wants businessmen to basically take out loans and invest it into the United States. But Powell, who is in control of interest rates, has decided that it's not yet the time. That is why Trump is very mad at Powell. But of course, Powell is doing everything based on data. To be honest, I'm on the side of Powell because he's just looking at the data. He's looking at the economic growth and he's looking at inflation. He's trying to balance it at around the 2% inflation mark. So he's just waiting for those NFP numbers to come out. He's waiting for the inflation numbers to come out. He's waiting for the GDP numbers to come out every month. And then he sits down with his team at the Fed and they make a decision. Do we need to raise the interest rates or lower the interest rates? He doesn't do things because he has a hunch. But Trump basically wants to force him to lower the rates, and he may be succeeding because he's crashing the stock market. He's kind of destroying the US economy. If this continues, if the huge tariffs continue, he could massively impact the US economy in a negative way. And then the Fed, because of bad GDP numbers, bad NFP numbers, bad employment numbers, the Fed could be forced to lower the interest rates. So very interesting battle between Trump and Powell. I've been closely watching it, and it's pretty fun. It's pretty fun, I'm not gonna lie. No matter which team you're on. I'm Team Powell, to be honest. I do like Trump, but the things he's doing with the tariffs is nuts. Doesn't make any sense. Like every economist that I personally follow and I personally respect has a negative view on the tariffs. Okay, every single one. Not even one expert that I personally respect says that tariffs are great. So I have to go with their research and their experience. It's like 40 or 50-year-old economists. And I have to say that the tariffs are just, they're silly. They don't make economic sense. Alireza says, there is currently a tariff war between China and the US, and our account is being margined. Well, if you're long the US stocks, then yes, you're in major trouble. Okay, you're in major trouble if you're long stocks. Fortunately, I've had 0 S&P 500 going into this, so I've only just bought it at a big discount. So I was fortunate in this scenario. I know Trader Nick had massive positions in stocks, and he was up like 5 or 6% for 2025. But because of the massive sell-off, he's now at break even. He had a really good year, and now he's at break even because of the massive sell-off. So a lot of people with a lot of money are highly affected by the stock market crash. Unfortunately, it is what it is. We just have to trade through it, but we're getting some discounts. So you could look at things in a negative way, or you could try to find the positive. The positive would be cheap stocks, right? Buy them while they are cheap. That is the name of the game. Buy things low, sell things high. And currently they are low. It's an okay price. Doesn't mean we cannot go even lower. We could, but if you dollar cost average, if you buy a bit here, buy a bit here, buy a bit here, eventually it is going to recover because the US economy is the strongest economy in the world. The US dollar is the most important currency in the world. So the US would be, I think, the last country to fall if we had a major shit show, because they're so strong, and the US dollar is basically backs everything. If you want to pay for gold, if you want to pay for oil, if you want to pay for metals, commodities, everything is quoted in US dollars, right? So yeah, US dollar is very important. US economy is very important. That's good. That's the positive out of this story. Cheap stocks. But for the short term, it is pain. For the short term, you're watching the sell-off and you're experiencing a lot of pain. So it's tough. The final one for today is going to be US oil. Okay. Something I do every stream. Something I don't know much about. Maybe I shouldn't be blabbering on about oil if I don't know much about it, but I'm going to do it anyway. So US oil. Well, let's start with the daily. That's always the smartest way to go. And the daily is bearish. Also, the fundamental reading is a bit neutral / bearish. It was bearish in the last few days. Now it switched to neutral. So US oil wasn't this massive sell-off. Now retracing a little bit. See? Okay, so retracing a little bit. But overall, I'm still bearish. On the 1 hour, we're getting some momentum. If you're a very short-term trader, you could try to get in on some short-term buy setups, and this looks better than the S&P. So it looked the same as the S&P up until this point, but now it's starting to break to the upside, which is interesting, right? The S&P is still stuck in the range. US oil is actually starting to break out, starting to break to the upside with some nice candles on this 1 hour chart. So yeah, that's pretty cool. It's looking good. And I'm gonna wrap it up right there. Okay, I'm gonna wrap it up right there. Make sure you guys join our free Discord if you haven't already. It's completely free. Or if you want to get access to all of our content, learn how to go from zero to a consistently profitable trader, then become a premium member at zentumtrading.com. So you can first join the Discord for free, become a paid member later. We'll have some discounts for Easter. So in a few days, you'll see some discounts. If you want to check that out, get a nice discount on your first subscription. I will see you guys next week, probably the same time. I like this time. It is 5 p.m. London time. So probably going to do the same thing next week. Hope you guys enjoyed it. Good luck in the markets. If you have any questions, make sure to put them in the chat. I try to respond to every single question. And I will see you guys after these small holidays that we have. So Easter, and we will see how the markets will do. Quick recap. The markets are pausing, except maybe gold. But most of the markets are pausing. We have the 90-day tariff pause. No one knows what's going to happen. The uncertainty is still really high. If Trump makes a new tweet, it'll for sure impact the markets a lot. Hopefully the tweet is positive. Hopefully it's negative for my gold trade to go up. But to be honest, I hope it's positive because I want stocks to go up. So yeah, that's it. See you guys in the next one.